India participated in a global collapse as far as equities are concerned. We'll be discussing all of that and also the way forward with the special guests on the show, Vikas Khemani from Edelweiss Securities, Neeraj Diwan from Quantum, and as usual, Ashwini Gujral on the charts. Ashwini, I'd like to come to you first. We've been talking about it. Almost for the fourth day we saw weakness coming in. Of course, today was much more pronounced than the previous 3 days that we would be heading lower. Do you think that now the trend is completely turned towards the downside?
Well, what has happened over the last couple of days is that, 6100 was the big breakout level, and that breakout seems to have failed. Now, in any kind of range, if the market fails to get through one side of the range, it generally tends to rush towards the other end of the range. So the 5500, 6100 range is still intact, and the market is now moving towards the lower end.
Neeraj, wanted to get in your opinion, and I think the ferocity and the way the market sold off really caught everyone off guard. What would you make of now the levels that one should watch out for on the downside?
Yeah, good evening. I think, the way the market sell off today, there was complete panic. Stocks were down 8 to 10% across. So I think one needs to watch for a couple of days. One needs to clearly watch how the FIs are behaving, whether you get some sell figure for them. Because I think it is getting more and more clear that the market rally was more and more about liquidity. It was all about liquidity. Though things had improved, but the kind of sell-off we saw with a little inclination that liquidity can taper off going ahead, and there was complete sell-off in the market. So better is to watch how the FIs are behaving and what kind of figures come from their side, and then take a call on where the market can make a base. I think one should not be in a hurry to make a base and start buying and see what levels you need to buy, but I think better is to watch how the liquidity is playing off in the next couple of days or couple of weeks.
Vikas, how are you really assessing the situation? Because a lot of problems seem to have bunched up together. The continuous weakness in rupee, and now global liquidity also seems, slightly on the tighter side. At least the central banks are sounding cautious again. What's happening in your view?
I think, as you just summarized well, that I think we had a great global equities rally in the recent past, and I think we have seen Japanese yield going up in the last 1 week steeply, and the comments from the central banks, and I think currency impact has sort of led to this correction. I think the sharp fall in Japanese market on Nikkei, I think, has also kind of had rubbed off all other markets. So I guess it is, I would look at it in that line, the correction. As far as the Indian markets are concerned, I guess, we have a case for interest rate going down. That continues, that will not change. The only thing I think we will have to worry about is that where does rupee stop and what kind of implication it would have. But, I would not at this point in time sort of expect that rupee, will slide significantly from here on, but one needs to see how the global markets react and what kind of flow comes through. We have a couple of large sizable flows also lined up for us in the next 1 or 2 months. So I think that should, in my opinion, sort of provide some amount of comfort and in settling down the rupee somewhere around here. But one has to really wait and watch and see how it pans out. But it looks like that I think our interest rates coming down scenario will continue. Result season is by and large sort of getting over, and results have been by and large, all right, without any significant disappointments. So I think, things are, in my opinion, this correction, I would look at it as more, sort of in temporary nature, given the current, recent rally and the global corrections. And I think it should settle down soon, but I don't know, frankly speaking, what level it will settle, because when it comes to the sort of liquidity, one doesn't know. So far, we haven't seen any institutional investor panicking out, any institutional investor changing the view in the recent past. You will always have some trading views being taken by the investors that cannot be stopped. But from a fundamental perspective, I haven't seen any investors panicking out or changing the view on the India story at this point in time.
So Vikas, do you think then this would become a buy on dips market?
See, I would, as I said, that, it clearly depends on what is your time horizon, because I think, as you said, that we have macros have sort of, as far as India is concerned, are falling in place. I think we have a significant political event ahead of us, so one has to take positions or make sort of investments only keeping that in mind. And I continue to maintain that I think markets will continue to remain volatile till the time that event is behind. And I think one will not be able to sort of go all out in the market and saying that, unless you have a 3 to 4 year or long-term horizon in the market. From a short-term perspective, market will be volatile, and such kind of news flow will always sort of create a high amount of panic in the market. So one has to, if one is ready to live with the short-term volatility, I would say that dips could be the opportunity to buy. The time horizon has to be medium to long-term.
Neeraj, what did you read in SBI's number and its reaction on the other PSU banks? Because what stood out in my view was all the other indicators looked okay, but NII degrowth of 5% at a time when other private sector banks are posting growth of 15-20%, completely spooked the entire PSU banking space.
Yeah, definitely. One did not expect that NIIs will be under pressure and there will be degrowth there. That is something which came out of the blue, and the profitability hit because of that. I think that really hit everyone, and more or less, it wouldn't have affected so much because even the asset quality was slightly better, so it wouldn't have affected so much. But just because it came on a wrong day when the market anyways were going in a sell-off phase and the stocks across were selling, so the impact really had much more than what it would have happened on a normal trading day. So though it is definitely some concern, but because it came in the wrong time, the fall which would have been 3 to 4% went to 8%, 7 to 8%. So I think that is what really accentuated the fall.
Ashwini, wanted your opinion as to what you made of the ADAG stocks which really fell in trade today. Would any of them present a buy on dips kind of an opportunity or a stay away?
Well, you shouldn't, try to dip into momentum stocks in this sort of a market. The market must stabilize, turn around, and then you talk about ADAG. A number of them have not been able to cross their 200-day moving averages. A couple crossed and then have moved back lower. So Reliance Infra, Reliance Capital, the way these stocks have fallen, I don't think they were showing strength in the first place, and strong hands are no longer buying into momentum stocks. That's the reason these stocks fall 8-10%. The only stock that you may consider buying is probably Reliance Communication around 90-95, but ADAG shouldn't be your first choice. The market probably has more downside and you'll get much better levels even if you have to buy them.
Neeraj, what did you make of the cut in Maruti today? Because from 1280 to almost 1700, it went mainly on weak yen going forward. Some part of that is starting to reverse now. Do you think that the 3-4% cut we saw today is just the start? It may raise some more value?
Yeah, actually, when the results came and we made a result update, that time also we had given a call that there's limited upside to the stock because most of the upside was coming because of yen weakening. So a little hint of yen strength, or little hint that came from Japan, that caused some panic in Maruti also. So I feel that Maruti can fall with the markets and there can be some more downside. I think as far as pure performance is concerned, Maruti, even at the current level, if it doesn't have too much upside for the next 1.5 years. So I think only if it corrects some 5 to 7% from the current level, can you make a call on buying Maruti and making some money in 1.5 years. So I'd better wait for some correction in the stock even from the current levels.
Vikas, how much of the bad news do you think is in the currency right now? Because it also seems to be dictating the FI's move. And at a time, at this time around, considering that the currency has been faring so badly, do you think that the bigger cue is in the currency now for India?
No, I think it is undoubtedly one of the big concern. If currency sort of, let's say, continues to remain deteriorate or depreciate, I think investors would get worried. But having said that, I think if you ask me, a lot of money in the recent past which has come in knowing very well that our current account deficit is a big problem, knowing very well that there is a big political event which is ahead of us. So I think it will be sort of not fair to assume that the money which is coming in do not know this kind of situation India is facing. So I would tend to think that this has come with a lot of such expectations, a lot of such uncertainties ahead of us. And I would not really, expect that there could be a serious sort of outflow reversal should the currency, let's say, depreciate slightly more from here. Yes, the extent of probably inflow might reduce. That also one doesn't know. But I think this money is, in my opinion, slightly stable, slightly sort of coming with the knowledge of all the short-term negatives in the market. So I would say that, it will be a sentimental impact, but not a structural impact.
Ashwini, you made a point that a lot of strong hands are exiting high beta and momentum counters. Probably it was the same kind of investors who drove 3,000 point rally on the bank Nifty. Now with SBI with a disappointing set of numbers and almost all banking stocks done with their earnings, do you think some unwinding can continue in bank Nifty as well?
Well, it's obvious that wherever there are big profits, that is the place that will see profit booking. And, broadly 11,000 to 13,300 type of rallies, or 12,000, 12,100 is easily possible. 50% retracement of the previous rally is possible. The other thing is that, the decline has just started. There could be further news flows which take the market lower. My point is that previous intermediate highs, the breakout from those levels failed. So in both cases, Nifty and Bank Nifty, 11,000, 13,000 range on Bank Nifty, 5,500, 6,100 range on the Nifty sustains. So the idea should be that being at the higher levels of the range, you should look to go short on every opportunity.
Ashwini, how would you look at a BHEL as well as a Dish TV, because both of them seem to ignore the good earnings today?
Well, BHEL is a weak stock, again, one that has not been able to cross its 200-day moving averages. Last few days it moved up 25, 30 bucks because of being oversold, but fresh reaction today. I think should head towards 175, 180 soon. Dish TV is a bit of a nothing stock, and broadly, 50 to 75 has been the longer term range. And these sort of stocks, I would think, would head towards the lower end of the range.
Neeraj, Wockhardt today sold off 20% and ended on the 20% lock circuit on reports that one of their plants in Aurangabad has come under US FTA alert. What do you read in this development? Because otherwise, the fundamentals of the company, they have been throwing in good numbers. Is it early to estimate? Because the management has confirmed that they are facing some issues from US FDA. Do you think it can, see a rub-off on some of the other plants as well?
Yeah, I think the news also came today, and there is a concern. And we have to keep in mind two things. One, definitely, as you rightly said, the performance has been very good, and because of performance, the stock has done very well. But then people are sitting on huge profits in Wockhardt. So because of the huge profits, the selling, it's easy to sell a stock where you have huge profits and where you have little bit of inclination that something can go wrong. So I think because of that reason also, because of the huge run-up and people sitting on huge profits, we saw this selling coming into the stock, and people are getting concerned about, definitely, if there is a concern in this factory, maybe some more facilities can also come under the scanner. So that's why I think people are getting cautious, and the selling came into the stock. And one needs to get careful also with the kind of rally we've seen in Wockhardt, and the kind of rally in the last 1 year has been really tremendous.
Let's get in a 360-degree view as to what the dealing rooms are talking about as well. Yatin Mota now joins in from our research team. Yatin, what's the first stock?
Well, the first stock to watch out for will be Maruti Suzuki, and after the 4.5% correction that we saw today, that is expected to continue because the yen is again, gaining momentum as far as the strength is concerned. So the weakness in yen is no longer there, and possibly there could be some impact as far as margins for Maruti Suzuki is concerned if the yen were to strengthen from the current levels, and hence the dealers are expecting some bit of profit booking from the current levels also. So 40 to 50 rupee downside on the back of weakness that we are seeing in the Japanese equity markets and the strength that we are seeing in the yen could possibly be a short trigger for Maruti Suzuki shares.
Neeraj, what are the specific stocks you have on your radar which you would recommend, for viewers to buy on deep declines, or any stocks where one should go ahead and book profits, as you were saying earlier?
See, we have this IT space where the mid-cap IT companies, there's a huge valuation difference, and I think there is scope, and some of the results which have already come also have been encouraging. And compared to large cap IT space, the mid cap IT space has a better guidance for the year ahead also. So I think one should look at bets from the mid cap IT space. And then again, interest rate sensitives, I still feel though there is huge sell-off happening in interest rate sensitives because most of them are high beta. I think on the dips, interest rate sensitives should again be looked at, whether it's real estate or whether it's selectively auto, or whether it's banks, PSU banks or private sector banks. So I think this is a space also can be looked at on dips.
Ashwini, shorting is the way to go for tomorrow?
Well, there could be a mild, 20-30 point rally towards 6,020, 6,030. That's always possible. But overall, it's a short on rallies type of market, and the overall bias should be on the short side. So SBI can be sold with a stop of 2250, target of 2120. Larsen is a sell with a stop of 1460, target of 1400. And NMTC is a sell with a stop of 120, target of 105.
Yatin, what's the second stock you have on your radar?
Well, the second stock to watch out for will be Dish TV, and given the fact that the margins and ARPUs have contracted on a quarter-on-quarter basis, did not impress the analyst community. We had the ARPUs which declined by nearly 3 rupees on a quarter-on-quarter basis, and margins were also declining. And given the fact that most of the brokerages have a buy rating on this one, there is a possibility of a EPS downgrade and a rating downgrade, which would possibly mean some kind of profit booking from the current levels. Hence, dealers are maintaining a short on Dish TV with a possible target price of 60 to 61 rupees.
Thanks for that, Yatin. Vikas, what's your sense? Do you think that in the near term it's going to be global cues and moves which are going to dictate the momentum for the markets now?
Yes, I think, given the fact that we have had a steep, global equity rally, and I think we have had significant flows from the global market, despite all the negative local environment in the recent past, we have been doing well. And I think also, obviously, there's a case for, interest rate cut which has been made, and I think it looks like that, you'll see that continuing. So I would say that, in a shorter term, till the time we see next RBI policy, you will see global mood sort of having impact on the market, because I think result season is by and large sort of getting over, and I think the next trigger could only come from the macro factors, some of the macro indicators. So till then, I would say still, given the fact that we were driven by the international liquidity, that would sort of have an impact for sure.
Okay, on that note, let's take time out and thank all of our three guests, Vikas, Ashwini as well as Neeraj. It's been great having you with us on this leg of Markets Tomorrow.